Hey folks, Dan Frio here, the Mortgage Update. Today is August 3rd, 2020. It's crazy. We're closing loans right now where the first payments are going to be due October. It just doesn't seem like it's that far into the year, but the year's flying. So I want to get to what's going on right now in rates, the economic calendar for the week, and then the video, secondary video I'll be posting in about an hour is basically going over home affordability, how these rates are helping home buyers. So if you're sitting on the fence, many times, I watch that fix and flip. Well, my wife watches it, that fix and flip show and all that stuff. And it's amazing how those people come in and it's like, the house is worth this, and then it's worth that, and then it's worth this. It's amazing how these rates are adding to the purchasing power of everybody. And we're going to go over those numbers later this evening. But for right now, I want to go over where rates are, where we stand right now. So let's get to it. Mortgage-backed securities market right here. Guys, why do we follow this? So for the newbies, for the people that watch me every day, thanks. Greatly appreciate it. And you make my, you make my business what it is today. And for the newbies though, just a real quick brief. Mortgage rates are affected by basically mortgage-backed securities, which is this. It's a bond that trades on Wall Street, and it might even be in your retirement fund. And just think of it as it's this plus the profit margins, or I won't say profit margins, the margins from the lender. Okay, those are the things that basically make up mortgage rates. So you might ask, well, why does this place have higher rates than this place? Well, they might have higher cost of production of that, being able to work on a loan, one, or, the other place might have more efficiencies, that's two, or let's just say one company wants to make more profits than the other. So let's say for example, just like anything else, you have a widget that you produce, you're looking to sell it, and 20 people make that same exact widget. Well, if you make it for $1, the other person makes it for $1.50, to make the same profit margin of $1, I got to sell it for $2. You got to sell it for $2.50, but we make the same net profit. So there's a whole bunch of things that go into this on mortgage rates, but that's basically what it is. So we follow this number right here, and this is what's happening to the price of mortgage-backed securities. To make it simple, and I do this all the time just to make it so you get it. Green is good. Green means rates are getting better. Red is bad, means rates are going worse. Okay, so that's the best way I can explain it. So that being said, we're up 2 for today. I'll take it. It beats red. The concerning part is, and I'm going to go over this a little bit more in detail in my secondary video today, but basically all the markets, look at this. Here's what's concerning. Here's what's happening to the stock market on Monday. All right. The NASDAQ just hit a historic all-time high. Great. But you go down through and what's happening next? Well, investors are keeping an eye on Washington on the stimulus package. Yeah, there's companies doing very well, like Amazon, Apple, all these other companies. But it's concerning when a lot of this information is dictated, or I don't know, what am I looking for? Is based on what the government is going to do for us. So if they produce a bigger stimulus package, that means, the stock market is going to go higher. You hate to say it this way, it's artificial. And that's what's basically creating this pullback in bonds and mortgage rates. So I'm going to say this, until things start to tweak. Pigs get fat and hogs get slaughtered. And that's going to be my motto once again, because we're seeing this happening in the markets, right here. This is basically saying, bond prices, and you just saw this move from up 2 to 0. The prices of bonds are moving up, and thus bringing down mortgage rates. And the biggest entity buying all this stuff is the Fed. So what happens when they stop buying? We have resistance levels, and let's go through this briefly. We have this is a ceiling and a ceiling. Okay, I'll leave it at that. Those are two ceilings that we're going to have resistant levels with breaking through. The floor is down here, meaning think of when you're bowling with a toddler and they throw a bowling ball and it bounces and bounces and bounces. Basically, that's what the ceiling and the floor is. Well, we saw resistance here. We saw it here. We saw it here. We kept hitting this line. These lines serve a purpose. We basically hit it here, just shy. We hit it here, ended the day off of it, and then we exceeded this one. Now we're hitting this. It's all because of what the Fed is doing. It's not like the economy's doing fantastic or people are manipulating, they're selling stocks and getting out of stocks. That has a little bit to do with it, but the Fed is completely controlling this thing. So these other lines through here are basically what's concerning to me. These are moving averages, and this is kind of one of the things we study. In normal markets, you're normally going to have a pretty tight range here with these lines. Excuse me. And you're going to usually be right along those lines where you're at or you're trading that day. Here's one line. Here's another line. Here's another line. I don't even know where the other line is. Maybe I don't even have it in there. Let's see. I don't even know where it is. It must have just fell off, or it's not even in the chart. So in a normal market, we should be trading down in here, down in this range, kind of where we were over in this area here. Sorry to get so technical today, guys, but this is basically the reason for my channel. Those really looking to dig in on this stuff and reasons for it and reasons why I act the way I act. If I locked you in, if I didn't lock you in, and so forth, because we have a lot of people saying, hey, why didn't you lock me in? And then when rates go up or down, why didn't you? Rates go up, why didn't you? And those are the areas where it's concerning because, I don't have a crystal ball. I don't know what tomorrow's going to bring. The only thing I can do is study these things that I'm showing you right now. So my concern is when this makes an adjustment, we could adjust back down to here fast. So again, pigs get fat, hogs get slaughtered. I'd rather tell you, okay, I'd locked you in at 2.875, and that following day, the rates could be 2.75. Okay, that's a possibility. But it's also a possibility it could be 3.25. You'd probably get ticked off at me if I said, okay, I'll get you 2.875. And, I didn't lock. I'm thinking, you know what, we'll just keep floating this thing. And then I called you back 2 days later and said, you know what, I missed out this market. We had a correction like we did back here. And oh boy, I know you were looking for 2.875, but the best I can get right now is 3.75. You go tell me to pound salt. Conversely, if I'm getting you 2.875 and the next day, maybe there is a possibility that you could have gotten 2.75. Well, compare a lot of things that you're doing again. Our costs are among the lowest in the industry. Our rates are among, if not the lowest in the industry. Is there going to be an anomaly out there where somebody can beat me? Yeah, every once in a while. But I'd appreciate you sticking with us. 0.1 isn't really going to matter. I hope it doesn't matter. Hopefully the expertise that we're giving you on this, the service we're giving you on this, and everything else is the reason why, you're choosing to work with us. And, that we're doing the best we can. I'll put it that way. So that being said, this is where we're at right now. The market is basically stagnant. The stock market ended up 236. Again, the biggest thing that happened in the markets right now, technical stocks technical stocks are doing very well. And then you have some pharmaceutical companies coming out with some things that's actually helping the market. But the biggest thing right now is stimulus. What's the Fed's doing? What's the stimulus? It's an artificial bubble, guys. So be careful. News for this week is basically unemployment or employment, hours worked, and wages. This will or could play a factor in what takes place later in the week. Once you start getting a recovery, and I don't see it right now because of Corona 2, at our heels. But as soon as all these numbers start to come in good, you're going to see rates kind of go boom fast. That's what we're trying to caution ourselves against. So that's basically what's going on right now. Let me refresh this newsletter that I'll post at the end of the day. Shopping takes longer. Home affordability. That's the video I'll be posting later this evening, and just going over what numbers, because of what rates are doing, how much more you can get in a property or when buying a house based on the same payment that you're looking at now. And there's a lot of things that we'll go over there. I have my new website, and we're cooking. I love it. It just launched about a week ago. This has been a couple months in the makings. Just go to the rateupdate.com. This is the best way to get a hold of me or put in an application. If you want to reach out to me personally, the best way to do it is probably one of three ways. I'll show you. You can give me a call. You can reach me personally at 844-775-LOAN. And that's broken down as 844-775-5626. I'd love you to follow me on social media, ask me questions, do everything that's possible there. And you can reach out to all my social media right here. You can email me. A lot of people email me, and I probably got about 5 or 6 loan estimates today, and I'll go through that in a second. But you can email me at D for Dan. Frio is F-R-I-O. So dfrio at preferredrate.com. That's the best way to reach me there. Here's the things that we have now new to the website. If you want to apply, the best way to do it, this is just if you kind of want us to call you and maybe work with you, talk you through some things. Doesn't make sense. If you're a first-time home buyer, click here, go through the process. We'll call you within an hour if you plug in the data during office hours. And we're here to help. We're not here to hard sell you. Basically, if you're looking to buy your first home, you're in uncharted territories. Don't get taken advantage of. So many people just push you into the program that's best for them. A lot of times with realtors too, they're going to push you over to their mortgage person who's just going to take down the data, get you pushed through as quick as they possibly can. Might not be the exact program that's best for you. Might not be the best rate that's best for you. It might not even be the best costs for you. Okay, you're not shopping around at that point. Here, I go over with you every day what I can and can't do for you. If you're looking to refinance and you just you don't know stuff, click here and it'll funnel you through, answer some questions. We'll get back with you. If it's during office hours, we'll get back with you. I promise you within an hour. If you really want to get things cooking, hit the apply now button. This is all brand new. And you're going to go down through here and click on either myself or one of my loan officers. This is everybody on my team. But if you want to do that, just hit the Dan Frio. It'll go right to me. That's me. And fill out all the information. You're going to have to fill in your own information here because you're creating yourself an account. And it's going to take you about 5-10 minutes. And I don't need you to go bonkers. I don't need all your account numbers and everything exactly. The best you can do it is what's appreciated. Based on the questions that you give and the answers, it's going to ask you at the end some of the things we need from you. For example, we're probably going to need some pay stubs, a bank statement, a mortgage statement, and maybe a W-2. At the end of this, it's going to actually prompt you. It will come up and it'll say, okay, we need your W-2, pay stub, bank statement, blah, blah, blah. You just go in and drag and drop the PDF file right into that. It'll go right into your file so we can analyze that when we're looking at the rest of your information. So what I was saying earlier is how a lot of people are sending me their loan estimates. Well, what's happening right now is basically with rates doing what they are, a lot of people are, getting a mortgage. So they're reaching out and saying to me, okay, so let me transpose that back a little bit. You're in the process of getting pre-approved. You got pre-approved and they send you out a fee worksheet. So either pre-approved and or you're getting refinanced. So we want to know the terms of that mortgage. Is it a good mortgage for you? Is it the best rate? Is it the best costs? What I ask you is to email me the loan estimate or what's called the fee worksheet. And I'll break down the information on what I can do versus what they're offering you. In almost all cases, and I got 1, 2, 3, 4, 5, 6 on my desk right now, I'm either beating rate, fees, or both rate and fees. I just got one in just now, And they are charging this person $15,500 in closing costs. That's nuts. I'll just leave it at that. So what I'll do is I'll get back with you saying, here's exactly what I can or can't do. Save that information. The information that you send me is going to basically have everything I need. It's going to have your address, the loan amount, the house's value, everything. What I don't have is what your credit scores are. So I have a sponsor of the show. It's called creditscoresandmore.com. No, I'm not pushing you to spend any money. I'm not pushing you to do really anything. Go to creditscoresandmore.com. Click step 1. It's a free credit score. There's no gimmicks. I don't want you signing up for any of its perks. I don't want you signing. It might say, okay, this is check this for additional credit monitoring, or do that. Don't spend a nickel. Please don't spend a nickel. That's not the spot to spend any of your money on, especially right now. And so when you send me in your loan estimate or your fee sheet, give me an idea what that credit score says. My credit score is 740, 680, 790, whatever it is. At least now I have your loan estimate or enter your fee worksheet. It'll give me your loan amount, your property value, the term of the loan, all kind of other stuff, but the missing link of this puzzle is your credit score, and that's one of the biggest pieces of this thing. So I'd appreciate it if you would do that. So that's it for now. That's the rate update for August 3rd, 2020. So please don't forget to give me a thumbs up if you like my videos. Subscribe down below. Click the bell. And every time I do post a video, you'll see it. If you want to watch them, great. If you don't, just ignore it and wait till tomorrow's. So I'd appreciate you if you do that. So God bless. Take care. Be safe. And I'll see you later this evening with a home affordability video to show you how much, with the rates being at historic lows, how much more you can afford in homes with the same mortgage price or same mortgage payment. So take care. See you soon. Bye-bye.